Hey everybody, welcome back to Swing Trading. It's good to have you here today. My name is Mike Fairbourn, Senior Manager Trading and Derivatives at Schwab. And today I wanted to talk about maybe some of those higher probability swing trade type setups that many of you are looking at in the market, but still using many of our T1 and T2 measurements, but maybe sometimes over a shorter term time frame. What we're going to be discussing today, specifically using exponential moving averages, is actually looking at those time frames for potential risk and potential reward, trying to improve that probability of success that many traders will look at when using these types of systems. With that, we're also going to take a look at maybe a shorter term time frame as we develop a scan here for you within ThinkScript that you'll all be able to take with you. So with that, welcome everyone. We've got Ben Watson in here, 30-year veteran of the markets. Ben does a great job in his classes. Always appreciate being out with Ben. On the road, last time I was with Ben, it was a couple years ago. It was out in Seattle. That was a memorable event. So was New York. So great to be with Ben at those times. But yeah, folks, any questions, comments you have, throw those in the chat for us. Happy to address those. Hello to you, Paul. JD is here. Chris B's here, as well as Richard. Actually, Jay Richardson. Richard might show up, but we got Jay Richardson. Great to see you, Jay Rich, as well as Michael. We've got some new names in here. Tuner, Rojo, as well as Pepito and others. Folks, questions, comments, again, throw those in the chat box so we can address those for you. But I do look forward to getting into our discussion today. And with that, let's dive into some disclosures to get the show on the road here. Now, material is intended for informational. This material is intended for general information and education purposes only. Paper Money software application is provided for educational purposes only. As we go and take a look here, investing does involve risk, including the loss of principal. Now, there's no guarantee that the execution of a stop order, no guarantee that the execution of a stop order, which we'll be talking about today, that they will be at or near the stop price. So with that, past performance is no guarantee of future results, and dividends are not guaranteed. Finally, there is a look at futures. We don't look at futures trading in this class, but we do look at the charts. Just wanted to state there up top too, the futures and futures options trading does involve substantial risk. It's not suitable for all investors. All right, and with that, let's dive on in to our big picture view of the markets here and taking a look at the S&P 500 index. You can see we did actually start off the day a little bit stronger today, but generally, that's what's beautiful about the charts. It's not so much always what's going on over here, but it's the big picture, right? What we're seeing in the markets here. And yeah, much of the same. I mean, in terms of, really approaching that level that we have up top, that 7,000 level. Will we get through it? We've been maneuvering quite a bit. It is not unusual at all for us to really be in a position where, we kind of drag a little bit after a big extended run. Folks, it's never too unusual to see this sideways motion. And these are really kind of similar lows and similar highs. The real question is, can we break up higher and rally with the underlying trend, which has been very, very, quite strong over this time frame? So the market's not really showing its cards too much, but I will say this, it's really holding much of its ground. Now, one thing that is quite interesting too is towards the end of October, yeah, that October, just last year, right ahead of Halloween, that's where we are. So we haven't done really too much over that whole time frame. So somebody that was a buy and hold, well, you're just kind of just still in that time frame. In this class, we're looking for the strongest moves that come up within a trend. We are looking for, which in many cases do resemble bull flags or cup and handle patterns, like we talked about last week, which is a favorite pattern by a lot of individuals. A number of major publications out there look for those cup and handles. We talked about that last week, but these flag patterns and what we like to look at in this class is the swing trade. So maybe picking up that time frame as we're waiting. And even though the markets are going sideways, there are companies within the 500, it's a big basket of companies, that are in fact trending in this nature. And what we're trying to do is just find this point right here, just before prices are ready to go up. In other words, capturing the buy low and trying to sell high concept. And today, we're just putting an overlay on top of that. We're trying to utilize those kind of setups that have a higher expectation of running higher from a trading perspective. What are we really looking at? What is showing us strength right from the get-go? And then how do we make potential return and potential risk measurements on that to try to capture at least return risk, a 2-to-1 ratio or relationship. Okay, so that's really our objective today. And let's dive on into it. So let's talk about a trade that we did last week. This is a trade we still have our stops on to the downside, got the limit onto the upside. I'm going to pull this guy down right now. And you can see I've already got in here for us a couple of different moving averages, and they are quite tight. And I'll explain what's going on here with them in just a second. But for right now, just as a quick review, you can see that we were looking at a flag pattern. This whole group was kind of breaking out a lot of the technology. So last week it was really utilities, energy, and transports. This kind of falls into, well, it does fall into the transports in a sense. Carnival Cruise. A lot of traders didn't necessarily like the fundamentals. I was reading some of the notes that came through. They said, yeah, the debt levels are quite high, etc. But the trend is up. And sometimes with those swing trades, remember, we're not necessarily buying and holding through these quarter-to-quarter time frames, right? We're really not doing that. In fact, our objective as we look for these flag patterns is really 3 days, actually up to maybe 15 to 20 days or so. 15 to 20 days. It's in that range. So a lot of times when it's outside of a fundamental announcement like earnings, we're just mainly using the technicals here. Although I think it is a great habit to look at fundamentals too. If you're looking to hold it longer, for example, or position trade it. But I want to talk about this trade. So right now, you can see that we have in place in here. I'll pull it down. There is our target really to the upside. Right now, it's just sort of steady as she goes. Not much has happened. And this is not unusual at all to see a big breakout move and then prices come down and consolidate a little bit. What you'll find too is that it might come back down and sort of rest on prior highs or 50% of that major bar. I'm going to zoom in on it right now to show you guys this so you can see it, what I'm talking about. So it is a big bar, and you'll notice we've come back down somewhere, sometimes in the range of 50%. Now, 50% comes back and rests on these prior highs. Just as a note, I thought I'd bring it up because it's not unusual to see a big move like this and then to kind of come back down. Now, the initial target that we're looking at all is this move right there, and that is our T1 move. That's the target one, and that's just the prior high. So as you can see, if we were looking at this as a flag type pattern, getting in as you're kind of consolidating, and there is a signal from our potentially higher probability entry point that I was talking to you about earlier. There's a signal here, and there's also a signal right when we got in as well, okay? But we're using it around a T1 initially, but that's the T1 target. It hit already. Notice our trade from last week came after we broke above that high, which was, let me see if I get this going, which was right above this range here. Okay, so this is going to be a fairly common occurrence on breakouts, although breakouts like this are not as common. We do look for them in this class. But you might see breaking above, let's say, a 2-month high or a 1-month high right here, where we're actually closing above the range. And you could actually, the bar was right there. We took that trade and it was right at T1. And basically, we're waiting now for a T2 target because we did not get an early entry at the bottom right there. Okay. Now, one of the key things as we look at a target setup like this is that as we are looking for the T1 trade, it's very, very important for us to line up those stops and our targets up top. It's a potential target. It's a limit order to get out. It's a stop order to exit down here. That's our target. That's our stop. Okay, but really to sort of visualize what that means in terms of where we got in. Now, when we did this, And I can actually highlight this because this could have easily been an entry day as well right here. Easily an entry day. Notice we're actually quite strong over through here. It's a stronger move. We broke up higher here, but we elected to put that stop order just below an entry point right here, right? And this was actually from a class that we did. This is one of the trades we did last week, but it lines up really well with our discussion today in terms of what we could be looking at for this trade. But you can see the stop was put right below the entry bar. We entered here, and the stop was just below it. Now, visually, I want you to look at this. We didn't quite get in at the top. It was somewhere right here when we were breaking above highs. I'm going to draw a little bar to represent that potential risk level down to our stop. Okay, that's risk. Now, quickly, visually, you could see that if we did a 1 here and another one, I'll just draw it off to the right. That's right. That right there, that range there, right there is basically a 2-to-1 potential risk to reward, reward to risk. We'll call it risk. We'll call it reward to risk first. We're trying to make at least 2-to-1. What's different about this class is I'm going to add one more line in here because this is actually, it's 2 plus, maybe it's not exactly 3-to-1. It looks like a little bit less than that. I'll say 2 plus, a little bit more than 2-to-1 reward risk ratio. What I want to talk about today to try to keep the expectations of maybe a win rate a little bit higher or more consistent, maybe more on the upside, is really trying to say I'm shooting for a 2-to-1 or better. But you could take a 2-to-1 before the target gets hit. Okay? You're making twice as much as the downside risk. We're trying to keep the probabilities or the expectations of those numbers getting hit a little bit higher. That's the goal. That's the objective here. Okay? In a trade like this. Okay, so a couple of different things. You'll notice over here that I do have 2 moving averages in place, and I'm going to just actually set this back, and then we'll just zoom in using these regular modes here. Now, what we're looking for is either off the bottom, we can trade here to the T1. Remember, this is a flag pattern that we're expecting, and I've got several examples to take a look at going forward here, but here's our T1. We're shooting for a T1 target anywhere through here, but we do not have our entry until we are below the 10-15 exponential moving average. Now, I've seen an 8, I've seen a 9-15, I've seen a 10-17. It's all kind of in that same range. Okay, but I'm just using the 10-15. The difference here is it's about a 1 week earlier time frame here. So this is about 1 week, right? It's 5 days ahead. It's an exponential, so it puts more emphasis on the more recent data. Okay, so it's about a five-day spread between the two, and it's roughly between 5 and 7, whatever numbers people were using. But basically, the high range is maybe 7, and the low range over here might be an 8. But some use an 8 or 9. I'm just using a 10 right now. Okay, so we've used a 10 and a 15, and this could be 15, 16, 17. But I'm just using some big round numbers. So just want to let you know there are some variations that could be used, and it's going to be very, very close. Now, the entry for the T1 up to the target up top, right? It's the T1 target. Still getting used to this darn new mouse. It's so good that it's sensitive. I'm used to the one that was like from the 2000s, early 2000s. But we're looking for an entry here. Now, what is that entry? When, in this case, the EMA's price has to do what? Be above both of them. We're looking for a couple of quick targets. Remember the time frame that we're looking to trade? About 3 to 15 days. Oh, there's your 15 right there. Right? It's a little bit, not so much the 3 all the time because you can have a quick move, but we did say a 10 to 15. Okay? But here is the entry point. Now, what you're going to have to do initially is if you've got those 2 EMAs over here, prices, I'll draw that in a different color. They have to be below here, and then price folks has to cross above both of those EMAs. It has to be above both. Do you see where that level would be? Do you guys see it? Oh, I found this on a breakout that we actually built. I think we looked at it last week. ThinkScript class. ThinkScript class, yeah. We went through that in terms of a scan, I believe. Yep. We'll do something similar today because we're going to build a similar scan in here, very basic and short term, using these EMAs, though. Good question. Do you guys see it, though? Where did we go below and where did we cross above? Well, we're down below here. Where is the sign that we might be coming out of that T1 base? Right there. It's right there. Now, I don't know if we got it somewhere in the middle here. There's an expectation that it might have closed above this level, but did we close above both of those lines? We did. We did right there. Okay, so that would be the entry. Now, a quick note that is very, very important. It's something that you can do here within Thinkorswim. Okay, now that you got it, I've got to clear this off. You can check out the recording if needs be, just to see these lines again. But you notice over here when we're using the diagonal line, we get something really, really cool that comes up here. Okay, and that is that diagonal line gives us a lot of great data. It gives us time, it gives us ratios, etc. Now, it's not to say that we couldn't use the same method for the downside, but I'm going to highlight here something for you guys. The one thing when these moving averages are so close together, you've got to really be careful with this. If, let's see, there we go. If, for example, there is a sideways channel over here. I'm going to use one over here. There's actually, we just use the most recent one. There can be a fair number of early stops. So you can really get stopped out a lot if, say, for example, the lines themselves are sideways, and they are. I mean, very much down here. In fact, even through here, they start to really, really flatten out a little bit too, right through there. You see them? They're getting really, really tight. And with that, what can happen is you can get stopped out a lot, because if you get both the lines crossing above and that angle has not shifted yet, you could be in some trouble. In fact, like right there, I think technically you got above those levels, but look at that line. The angle on that is incredibly flat. So we're going to tap into a tool right here that we've got. And although we haven't used this before, I think it's a great tool that can be used right off the platform. Over here, I mean, use this diagonal line and just show you that, like, when like you start to see something that is, you see this angle here? Look at the angle at the bottom. Look in the box, everybody. You see at the very bottom? It's about a 13% angle that you're getting as prices are slowly, the magnitude is sort of dissipating over time, right? It's 13, that angle. It's a very, very small angle. This is how we can kind of project these numbers. If I go over here, it's going to be even worse. Click again. Yeah, we're looking at 2, about a 3% angle to the downside. Not much is going on. What we're looking for here, when we see these lines go like this, and they are too small, we're actually looking, for a move like this to occur. So the lines are going like this, and very likely there's going to be a crossover that's going to occur, but you're looking somewhere about a 20 degree. Just running through several examples of this when the move is really, really quite strong. The 20 degree, because if you're down here, like less than 20, and it's in the teens, really, and the low teens a lot of times, that's where these stops are going to hit. So using an angle, it just tells us of the strength that these bars are really coming in at. I mean, they're coming in stronger. I'm going to try to draw some. It's kind of a longer bar, but so even off the bottom, it starts to shift, because here's one that kind of comes off the bottom, and then what happens if you get a big enough move and those percentages start to change, using the daily chart, which is what we're using here in the swing trades, we start to get 20 degrees or greater. Let me give you an example right here. Let's go back to this drawing set right here, and I'll just show you. You'll start to see those lines come up. Look at that. That's 27 right there. And now anything north of 20 is pretty good. Let's go back now, and I'm going to go back over into this range here, and I'll show you. So this through here, what do you think? It's really slowing down. That's about 16, 17, 18%. It's not what we're after. When we start to see that bar change and we start to break above this level, we need to make sure that it breaks above with an angle that can kind of match that magnitude. And this is getting really quite strong. We don't have to go out that, we didn't need to go out that far, but you can see it's about a 32 right. Sorry, do that again. There we go. 32 right there. Clearly above 20, but that's a 32 and you're showing strength. Now, where are we at for this move? The next move. We clear on that? If the angle is not strong enough, though, you can just get a lot of stops out. So we're really looking for some conviction out here. A lot of times you'll see that volume bar spike as well. Okay. Objective, just to create higher expectations of that follow through. Now, here we go. If we come over here, and I want to highlight this here for you. You see this breakout range right there? You can still do it. Are prices above? Yes. And one of the key things here is we're using this. We crossed below down here and we spiked back up. But if you're going to get a big bar and you're going to take out a T1, basically using the same idea, the same concept. And that's really what I was looking into last week, was that sharp spike to the upside. You have to have conviction, because folks, what is this previously? What is that? That is a resistance until we get out of it. That's a high. We didn't know it was going to be resistance, but we got an idea over here. Prices did fall. We came up touch, 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 breakthrough again. Corollary to resistance can be support. And we already talked about maybe resting on that level right there. Now, is it a guarantee it's going to follow through? No, but again, we're dealing with expectations of a move based upon market strength. There's strength for this stock. Okay. So like I said, to enhance those expectations too. So those are the technical enhancements, right? So price above, the angle is sharp enough, greater than 20 degrees. This is actually a really sharp, and actually a lot of times, or I should say greater than or equal to 20. We're looking at either of those two, but it's that follow through we're looking for. But what was one of the main factors? Yes, in this class, we do shoot for a T2 of the flag, which is this to this, right? We're just measuring that price from there on up to there. That was our T2. But with something like this, we're really trying to keep it mechanical too. And we're saying the reward to risk is at least 2 to 1. We want to try to make twice as much as our risk. Again, that's the risk over here. Rewards up front. All right. Yes, in fact, we're going to jump right into the script right now and start building it so we can see some of these hitting right now, because we can actually easily just use the ThinkScript here. A very basic one that you guys can write. I'll share it for you too when we're done. But where we're looking at, maybe a moving average on prices, prices are trading above, generally speaking, above a 200-day or a 100-day, something stronger. And then prices are just barely getting above this level, right? Right there as well. Okay. So that's what we're kind of looking at today. You guys remember, well, last week I talked about, one of my classes, why don't I have this class? But actually, it was a tweet I sent out. Anyways, I'll pull that up here in a second. I was just showing you, like, for example, like this will happen every once in a while too, when some of the companies have been sort of, how can I say it, underperforming for a while. Some of the staples, for example, we watched this in the markets and sectors class. We saw some initial early strength in markets and sectors over here, and so we began watching it. And this move over here on one of these companies was it was kind of interesting, because it was different from this whole entire range, because we began to finally break above some highs over here, right? We just began to show a little bit more strength. And we began to break a little bit higher. Now you're going to start to see, you guys, now that we've identified this, you're going to start looking at it. You say, well, where, Mike, was the entry point? We're not using a Cahold. This is kind of a pre-Cahold entry in a sense. It could be at the same time. It could potentially even be a little bit after, but it's more of a verification of momentum. Okay, do you see the pullback right here? We went below. Prices are below that level right there. When did they move above our two EMAs? Right there. It wasn't actually a hold yet. Okay, where was our exit point? Right here. So this was kind of a shifting industry. We didn't know if it would continue, but it was a little bit fascinating to kind of keep an eye on. That was the exit. Excuse me, that was the stop, potential exit, right? In terms of a stop just below that level. And where was the target? The target was either the T1, which was the high, or a 2-to-1. Okay. Now, if it breaks above here, could somebody have gotten in here for the T2 target? So let me just label these. T1. Yeah, you guys see it. I don't want to go too fast because some of you are, fairly new to this as well. But there you go. There's your target right there. T2, I'll label it a different color in red. Just simultaneously put it over here. T2 would be the what? The length of this flag, or a 2-to-1 reward, potential reward to potential risk level. Okay. So that's what we're looking at as we go through this. So many of these have been moving. In fact, let me just pull this up real quick. Yeah. So over here, let's see. Yeah. I'll just pull this up real fast so you guys can see it. There we go. I'd sent this out previously, and sometimes these are interesting when they do come up, but this was a tweet I posted. Yeah, it was just Clorox, and it bounced after post earnings. And this was the one, we just been kind of talking about it after that markets and sectors class because it was a little bit unique. And that was right up the 200-day moving average. Now, this can also represent other areas of strength, perhaps to the upside, if it breaks this. And sometimes it can act as a strong level of support. Basically, though, it was really just giving us a sign that maybe, there we go, right at the end. But there was some support. There was some resistance there right at the 200 and longer term resistance as well on the chart. We cleared that, and sometimes you can get above it. Now, how did we do since that point? Well, let's just pull this up and show you right here. By the way, if you guys want to follow Ben and I on X, Ben Watson CS, Mike Fairbourn CS, love to have you on board if you're interested. I just wrote in the chat just this handle up top here. Okay. Many of you already are. Appreciate it. I've got to follow you guys. Let me know, though, if I need to follow you back on X. Just have a few followers, and so it's hard to, find everybody. You go by different names as well. Here it was, though. I think that was our 200 right here. Right here. Let's just pull it up. I got a longer term one. This is a little side note. How do we do after that time frame? Simple moving average, 200 right here. And it doesn't always happen. That's for sure. It doesn't always happen, but the 200 can be because we weren't sure what was going to happen. Maybe it can continue. And sometimes what it will do is it might hit the 200 and it starts to come up and show more strength. Even like staples that have been down for a while, they can, under the right conditions, if there is rotation, start to look like growth stocks. And sometimes the dividend yield can actually be higher too. So keep all that in mind. If the prices have gone down and they've continued to raise dividends. So I've got one more to look at here. Actually, two more. PG was the same, very similar. I'll leave the 200-day on. Could represent a longer term shift, and CHD is another one too. You see it right there. So showing some of these flags, that was the markets. That was the sector that was showing strength. You can see it really, really lifting off that level here. Look at the slope too, you guys, of this one changing. Pretty powerful change in that slope. Do you see it? From what it was, look how many times we could have got stopped out down here. Oh yeah, just a few. And that's not a good slope. That is not a good slope. But what it is kind of an interesting quadruple bottom. I'm counting about 4 lows there before we started to break into higher highs. And the interesting thing here is we've been down for a while. So some of these areas could be interesting for the possibility of a bounce. You see the little mini flags coming in here? Look at that mini flag right at the 200. There you go. Gets a little bit, there we go. See the little flag right there after a big run? Look at all that ground that you held too. Quite a bit. Did you see the big move here? We did. If you got in even on this bar on a breakout, look at this. Stop below here, wherever you got in at, 2-1. Did we hit it yet? We don't know, but we're coming up to maybe another one right here as well. If I did change this to a 9, let me just show you how this would impact things a little bit. It's just slight, but it's like a 9 or an 8. See, we're right at the 9 right now. Sometimes prices might bounce at a 9. I'm just saying it's a sharper move, and that lower moving average could be interesting. Well, let's do this. Let's get now into some of those as well. By the Thea's got some points on there, as well as, oh yeah, resistance on the max. By the way, yeah, some of the tech could be in an area of, like Apple was one that was coming out. There you go. I mean, as from a pullback, we'll see if that continues. But look over here with me. You see it? Do we have a move above those levels? Do you have the measurements in there? These are some things to kind of look at here. This is really kind of a long-term. We're actually looking at, this is sort of the initial flag pattern right here. Where did we get above it? Right there. The 2 lines got above there, and that's exactly where to. It's a confirmation. So you want to drill into it, but just as an example again, where did that angle start shifting? Oh, can't click on it that fast. There you go. It's about a 28% angle from really this sideways range over here, which was very, very, that's in the teens. And then this one was sideways as well. So many of these were just looking for the resumption of a longer term trend. Now, let's go into the scan tab right now, and I'm going to highlight a few different details here for us as we put this in place, and I'll show you guys how kind of straightforward this is. Yeah, so does it mean you're looking for the trend reversal or momentum continuation? It does. And we're looking for enough momentum strength to really see if it's going to shift. And what's helping us with that momentum is this right here. It's not only, closing above, prices closing above those 2 lines, right? It's got to be above both of them, right? But it's also, we want to make sure that that magnitude right there, we're the degree that we're measuring is 20 degrees plus is a way to say it. It's got to be showing some strength. And by the way, if I were to shift this down to a 30-minute chart, which we can scan for too, it's more of an intraday kind of an indication. Those degrees are very likely going to go higher. You're probably looking at 30 to 35 degrees, kind of a change. If it was a 30-minute type chart. I mean, I'm just saying that magnitude could likely increase a lot in terms of the slope. All right, well, let's do this. We're in the scan tab, and now we're in the stock hacker over here. Let's go over here and add a filter. We're just going to go into add study. When this pops up, we're going to simply go in and click on the pencil there to change this, to edit it. And first thing we want to do is delete the ADX crossover. We are in the condition wizard, so really, really easy to build this, right? And let me show you what we're going to look at here. We're going to do a couple of things. I'm going to do it the most simple way I can, because many of you are getting familiar with this, and you don't need to understand code or anything to do this. Okay, it's just a 1 line. Show you so simple. So we're just going to look at price initially. I just clicked on price because we're trying to make sure that the closing price is crossing above an exponential moving average, a specific one, and that's the study. So I'm going to go over here. I'm going to type in exponential moving average. I just put in EXP as an example. It's MOV average, AVG exponential. But there, we'll just leave it. We can leave it as the 9 if we want. 8, 9, or 10, really. I'm going to say this. I'm going to leave it actually within the same bar, and we'll see if anything comes up. So we'll just say it's happening today. Okay, it's above the 9 today. Now, if it's above the 9, you say it's safe to say it's above the 10, or excuse me, it's above the 15, but it doesn't always happen that way. You actually have to put both in here. Now, there are some tricks we can do, but I just want to make it as easy as I can, you guys. So let's do this. Add condition. Let's do it again. So here is price. I'll speed this up a little bit because you just saw it. Crosses above the study, exponential moving average. Scroll on down. There's our 15. And what we're going to do is we're just going to say within the same bar. So we're just looking at the close above there today. Now, let me just add one more. And that is, I just want to see on a daily chart, I want to make sure that the price of the stock is also above the longer term 200-day moving average, for example, because, or 100. We could even do 100 just to ensure that we're in an uptrend. Generally speaking, prices, higher highs and higher lows on the stock. Okay. So let's see, price closing is greater than in this case. So it's not really crosses above. We just want to make sure that it's greater than that today. And I'm just going to do on this one, a simple moving average. We could use an exponential, it's fine. But I'm just going to say, like in this case, we'll say above the 100-day moving average. So it's a little bit tighter than the 200. You can make some adjustments there, but we want to say that it's above it right now. You guys see what we've done? Okay, so price greater than, actually crosses above the exponential moving average. Now, I'm going to double check that that's a 9. We can see the 15 there and the 100. The default actually was a 9, which is commonly used, but I'm just going to make sure it's there. Yeah, so maybe if I highlight it again, it will show it. Nope, it just shows that. But it is, the 9's in there. We just showed it to you, right? It's right there. That's the length. Save, click OK, and that's it. You want to see it? There it is. Now, folks, ThinkScripts aren't guaranteed for timeliness or accuracy, just as a side note. But I'll share this with you in just a second. We are looking at the S&P 500. We're scanning in the S&P. I'm down in the public folder. I'm right there in the S&P 500. I'm going to go ahead and click on scan there. There you go. These happen today. What's moving today, perhaps? We've got a few different things in here. Anything you see? Man, it's kind of a variation. MCHP, I want to look at that one. Ralph Lauren, wow, what a variety. Ralph Lauren and semiconductors. So let's do it. Here's RL. Okay. There's the move right there. Now, granted, it did dip, but it's coming back post earnings, and that might be something that you could look at. But did you notice we're closing above those two today? Is it above the 200? Excuse me, it's above the 100. This is the 200, but you get the general sense that what is the trend doing? Yeah, the trend is up on Ralph Lauren. And now we're looking for that move. Now, the question is, I would think here that you're looking for an additional confirmation day. Remember, you can actually take it on any day you wanted to. But this is kind of the initial move. We don't even have an initial flag coming out. The only thing I could say is if this is a long-term flag like this, do you see it? Long, super, super long-term. I think it could still fit into that category, but does it fit into that 3 to 15 days? The angle of this move has not shifted yet. It's sideways. We did close above. Haven't calculated the angle yet, but there you go. So look over here with me, guys. Look at this. So price is coming up. Okay, if we got maybe a break above a high and pullback, then you could be looking for that 2-to-1 relationship or a flag pattern move up. So this one might be a little bit premature, but it's showing you there's strength off the bottom. Now, people that are looking at ultra short term could use something like this and say, that's enough strength. I'm just going to do, literally, they might even do this, a 2-to-1 reward risk on something like that. Okay, they could. But in this class, we do like to use the flag patterns. We like to use, well, price patterns in general. MCHP was another one we saw. Okay, here we go. Now, MCHP, I can see we had actually the initial flag pattern right there, and that was your initial signal here. Stop below this level, target 2-to-1, or you'd actually gapped above the T1. We've got kind of a longer term move, but we also have another flag pattern sort of developing over here. We're just barely getting signs of this right now. We didn't close above it, and guess what we don't have? The angle. So if we get that another day in here where that angle starts to shift, that could be interesting. But right now, it's just flat. It's not strong enough. Okay, you might even be getting a K-hold here, but it's not strong enough. You're looking for another day where those lines are giving you something like this off the bottom. Do you see that? That's an indication more of strength coming in. In fact, you even got it off the bottom over here too, just like this. Okay, you see it right there? That's where the lines begin to shift, because the whole idea in this class is to look for that higher expectation. Folks, in this class, what we always do, we just try to get the strength, the higher expectations for a better magnitude follow through. In fact, let's do this. RL, Kevin. Yeah, it's not very good. In fact, it hasn't changed at all. In fact, I would call that, just looking at it right now, that's the angle right there. It's barely shifted at all. It's about a 6%. We're looking for a move that's about there. That's called conviction, more strength. We're really trying to capture that momentum around a risk-reward relationship of a 2 to 1. Okay. Wow, what a variety of stocks hitting it. But remember, this is just today. If we wanted to give it one additional day, you're going to get a lot more if we go back into this ThinkScript. Oh, I just made it longer. I just grabbed it just enough to, there we go. Go over here and say this. Within the last 2 bars, save. 2 bars, save. So in other words, we crossed above price in the last 2 bars. Watch this. A lot more. You're going to be able to see here that happened about double. Yeah, it was 11, right? 11 to 22. So double. If we're looking at that, look at some of these. Now we're getting some more, more companies in here that you can see. Yeah, there's a few utilities and a few others in here that we could tap into as we look at it. All right, let's share the script, Prakash. Yeah, absolutely. Remember, again, ThinkScript's not guaranteed for time distraction, folks, and I always take that ThinkScript and I always put it at the bottom of the YouTube channel at the end as well, just so you guys have it. But that's it right there. I'll just title it for you so you can see it. But that is our EMA, really an EMA crossover we're looking at. There it is. So take that link, copy it, go into setup up top, open shared item, and put it in this shared item box. Click on preview, change the name of it. Maybe just name it what it is, EMA crossover. Click on import, and that's going to pop up for you where? Right over here in the load scan query. You just want to load it up after. It will show up there, whatever you have it as. But again, not guaranteed for timeliness or accuracy, but I wanted to post it there. Folks, if you enjoyed this discussion, if you got something out of it, smash that like button. We've really shifted a lot of our focus as of late into that momentum, trying to give maybe a little bit more conviction, more expectation of that move coming up. Today, we introduced that with a stronger slope across a couple of key, according to a lot of traders, they like to see those moving averages. Prices are getting above both. We did all that within a price pattern too. Lastly, we built all that out as a scan so that now you can look for these going forward. And believe me, we're going to be looking at these going forward as well for potential entries in the past. But the homework assignment, go through these and try to spot what we've got. Bring me questions. Put them in the Q&A or the questions after the at the bottom of the channel in YouTube, and I'm happy to address those for you. That's a great feedback loop for us, folks. But smash the like button if you did find this informative and useful. I'm going to go over here and just say too, I'd love to have you subscribe to our Trader Talks channel. You can go in here. It is free to subscribe, which is great. You get our live stuff. You get our playlist down here. You actually get also here, you can type in this section here, because we did, like last week, we did the cup and handle pattern. I just type in measured, and it should pop up the measured move breakout right there. So we did that last week. You can tap into that as well, identifying those, which is another target approach from a number of different price patterns. Folks, with that, my time is up. It's been great being with you today. Ben, thanks for your help. Great to see you all, folks, and excited for you to do some homework on this, see what you find. On that note, everybody have a fantastic rest of the day. See you next time.